Hey everyone, this is Joey Milam at Alpha Mortgage Advantage, and I thought I would do a little bit different video today and talk about self-employed income. Now, there are a big varieties of types of self-employment, often depending on whether you are incorporated, have an LLC, S corps, different things like that. But I think it's probably one of the most misunderstood things, and something that I get a lot of questions on, certainly from borrowers who maybe think that their income is one thing, but once we as loan officers get a hold of it, it's a very different number. So I thought I would just kind of show the numbers and kind of just a sort of a generic example of how this is done. Now, this is just one specific example. Again, there are many, many types of self-employed income. But what I've got here on my screen is a profit and loss from business. So this would be something that we look at on your tax returns. We call it the Schedule C, and this is from someone who is a sole proprietor. Oftentimes, real estate agents are just sole proprietors and don't necessarily have corporations set up. And this is often how we would see your income from the year. So we kind of go through here and see, up top, you've got your income. There might be some different things here. And then basically, it's a simple profit and loss. Everyone, you list out all of your various expenses, and we take your gross income up here, and then we've got the net income down here of 53.5. However, when it comes to a mortgage, we don't necessarily go by just the net number. Now, someone coming to me may say, well, I made $100,000 last year. And while, yes, you technically did, when you're self-employed, we really go by more, oftentimes closer to the net number, because we have to take into account the things that you wrote off, the actual expenses that you had. Those are expenses that are not generally considered when you are employed as a W-2, salaried or hourly employee, because then obviously you're not paying all those expenses in most cases. These are things that you are paying. Now, there are some things, though, that you're legally allowed to write off that are not true expenses. They're not actually money that's out of pocket. Being able to write off mileage, for instance, on your car, that's not a real expense. Obviously, you pay for gas and things like that, but the actual mileage write-off is not a real expense. Depreciation of assets is not a real expense. The use of home office, not a real expense. Those are all things we can add back in. So we as lenders have a multitude of ways to look at this, but this is kind of how we would calculate someone's income based on this year of tax return. So over here on my little sheet, I've got net profit or loss from line 31. I go down here on the left side of the tax returns. 31 is 53.5. So I put in $53,500. That was the income. And I sort of go down the list of things here, but right offhand, I know depreciation over here. This person depreciated $15,000 worth of assets. Non-deductible meals and entertainment. So that's where I go down here to line 24B. They did $4,000. That's actually going to count against this person, because you're only allowed to write off 50% of your meal and entertainment expenses. Therefore, we have to assume there was another 50%. So that gets counted against you, actually. Home office use down here, we see there was $3,000 of that. So I'm going to put that in. And then mileage, there's different places mileage will be shown, but usually it's on the next page. This person did 5,000 miles. So I'm going to go in here and put 5,000 miles. That shows me that the estimated income for the year for this client would be about $68,800. So that's the number we'd actually use. There's a whole calculation that goes on for pretty much every client who's self-employed. And some may have multiple corporations, things like that. But I thought this would kind of give both real estate agents and potential clients an idea of how we look at things. It's not always cut and dry with the numbers. And again, just thought I would kind of show an example. If anyone ever has any questions or wants to ask, how much would I qualify for a mortgage based on my tax returns and based on how much I'm claiming both in income and deductions, I'm more than happy to help with that. I can usually look at them fairly quickly and give you an idea. So my direct number is 910-250-8888. Feel free to reach out anytime, and I hope this was helpful and that everyone has a great week. Thanks.